Hello everyone, and welcome to another informational video for Closed-End Fund Mastery's Super Screener and Interactive Report. For those of you not familiar with Closed-End Fund Mastery focuses on three primary goals: distribution sustainability, long-term appreciation potential, and being well positioned for future distribution increases and special distributions. To get better acquainted with this powerful tool, I have left some useful links in the description below. Now on to the video. Now, once you've picked your favorite funds amongst the highest ranked quality closed-end funds, and then you compared them using our fund comparison tool, there might be that one little nugget of information that hasn't been discovered by you to help put your decision over the edge. And that's where our Fund Stats page comes into play. On the CEF Mastery Fund Stats page, you'll find information about a fund that you didn't even know existed, and it's presented in an easy format that anyone can easily understand. In this video, we're going to focus our attention on the owner's equity / shareholder distribution chart and its different components. So in this video, we're going to easily determine if a closed-end fund distribution coverage is met using the Closed-End Fund Mastery's owner's equity chart. We are going to break down the components of the owner's equity distribution chart by looking at what makes up a fund's paid-in capital, its undistributed earnings, and its shareholder distributions. Then we're going to look at some real-life fund evaluations using the owner's equity chart. And finally, I will be showing you a guaranteed way to determine if a fund is covering its distribution for the current period. If you gain value from this video, or if you would like to see more videos like this, please give it a like, a comment, and subscribe. I have also listed some links to additional videos and some free offers in the description below. Here you are currently looking at the owner's equity chart for the currently highest ranking CEF Mastery qualifying fund, FIF, or First Trust Energy Infrastructure. In this chart, there are three components. The first is paid-in capital, the second is undistributed earnings, and the third is shareholder distributions. When you hear terms such as return of capital or dividend reinvestment, this is where those funds go to or come from, paid-in capital. Going a little more in depth of what makes up a fund's paid-in capital, increases to that amount would include the initial investment, self-offerings, which are a cost-efficient way to sell shares, ATM or at-the-market offerings, which is selling new shares at available market prices, rights offerings, mergers and reorganizations, and the aforementioned distribution reinvestments, which is shareholders reinvesting their current distributions back into the fund. Items that reduce the paid-in capital amount are repurchased shares and a return of capital. Now knowing what we know about paid-in capital, let's go back to our highest ranking qualifying fund, FIF, and see what kind of story we can glean from their paid-in capital history. Currently, our data goes back to May of 2019, when they reported a total paid-in capital amount of $286,000 plus. 6 months later, at their next report in November 2019, they only had $267,000 plus in paid-in capital, which is a slight reduction from the previous 6 months. Now, knowing what we know about paid-in capital, what would have caused that number to reduce? It was either return of capital or the fund repurchasing their own shares. 6 months later, there was no change. 6 months after that, it went down even further, or $255 million plus. Same probability of cause, return of capital or the fund repurchasing its shares. 6 months later, lower even still. 6 months later, lower even still. 6 months later, lower even still, to $238 million. This is the number of their most recent report. And if you look up at the alerts box, you can see they repurchased just over $6 million in common shares. If you look at the difference between this 6-month period and the previous 6-month period, it almost equates to $6 million plus to the dollar. Now, I actually looked into the history of this fund, and I happen to know that the majority of these declines were the result of the fund repurchasing their own shares. However, since May 2019, when we started recording history for this fund, it does have a return of capital annual average of 68.86%. Now, the next component of the owner's equity chart is the undistributed earnings, shown here by the purple line. What this line represents is the net effect of every single penny earned by the closed-end fund since its inception, minus every penny it has spent on expenses since its inception, and minus every distribution the fund has ever paid. This is the account that all distributions are made from that are not return of capital. To give you a better understanding of what this number represents and how it's represented, we're going to do a little behind-the-scenes look at how a closed-end fund might account for this figure. Here's a portion of the balance sheet, as well as the statement of owner's equity for the fund, FIF, which we're currently looking at. What we're paying particularly close attention to are the figures that are enclosed in the green box. If you look at the figure on the top line, you might see a term that you are already familiar with, which is paid in capital, in the amount of $238,420,372, which is the exact same amount from the latest report indicated in the owner's equity chart. The following figure is par value at $162,371. This figure is immaterial to our numbers, but if you're curious as to what this is, when an entity is formed that issues shares, such as a closed-end fund or even a corporation, those shares are assigned a par value, a face value, and in most instances, that value is assigned 1 penny per common share. And if you look at the number of common shares outstanding, 16,237,096, multiply that by 1 cent and you get the amount of $162,371. Below that is the accumulated distributable earnings of $53,532,311. If we go back to our fund stats page, you can see this figure represented right here as well. Also, if you notice, the net asset value of these three numbers combined also equals the net asset value of the fund's assets minus its liabilities. When a fund makes its filing with the Securities and Exchange Commission, the numbers provided are usually summaries of all activity in those particular accounts. But to give you an understanding of how these numbers came to be, we are going to take a hypothetical look at a closed-end fund. For our hypothetical fund, you can see that on January 1st, 2022, it has a total undistributed accumulated earnings $1,075,000. But what you do not see is that that number is comprised of accumulated earnings in the amount of $500,000 and unrealized gains of $575,000. You'll also notice we have net investment income of 0, short-term realized gains, and long-term realized gains of 0. And the reason these amounts are set at 0 is because it is the first day of the new year, where no activity has transpired in those particular accounts. Now, to simplify our examples, we are spanning it over a period of 1 year, but you'll be able to imagine how this scenario plays out on a quarterly basis or a monthly basis. Now, as you can see in the column next to it, our hypothetical fund earned net investment income of $100,000, short-term realized gains of $12,000, long-term realized gains of $62,000, and unrealized gains of $250,000, for a total increase of $424,000. Now, throughout the year, our hypothetical fund paid distributions from net investment income of $96,000, distributions from short-term gains of $11,000, and distributions from long-term gains of $60,000, for a total of $167,000 in distributions. Now, if you notice, on the day before the last day of the trading year, our hypothetical fund has an undistributed amount of $4,000 from net investment income, This amount is the undistributed net investment income, or UNII for short. A lot of you with closed-end fund experience is more than likely familiar with this term. I intend on doing a video about this particular topic exclusively. Working title, UNII, a highly overrated indicator of a fund's ability to meet its distribution. Below that, we have in excess of $1,000 in short-term gains, $2,000 in long-term gains. We have our total of unrealized gains of $825,000 and the initial accumulated earnings of $500,000 for a now total $1,332,000 in total undistributed accumulated earnings. Now, on December 30th, 2022, we now have an excess of realized income of $7,000. This fund now has two options available to it. It could return all or a portion of this in the form of a special distribution, or it could decide to roll the entire amount over into the following fiscal year. Now, in accounting, all income and expense accounts are zeroed out on the last day of the fiscal year, as you can see under the column header December 31st, 2022. And if you continue down to the accumulated earnings, you can see that the $7,000 was not distributed as a special distribution, but the fund decided to carry that amount over into the next fiscal year. Then on January 1st, 2023, the new beginning balances would be unrealized gain losses of $825,000, accumulated earnings of $507,000, for a total undistributed accumulated earnings of $1,332,000. And the $1,332,000 would be the only figure that you see when you look at the fund's filing with the Securities and Exchange Commission. Now, a chart providing just these two components alone in and of itself is a very powerful tool, but why stop there when I can make it better? That brings us to component number 3, shareholder distribution, which is the blue line. Closed-end funds are required to report to the Securities and Exchange Commission using a very constraining criteria. However, Closed-End Fund Mastery does not report to the Securities and Exchange Commission and therefore does not have to be so restricted. When it comes to information provided in our owner's equity chart, we look to two financial documents that are enclosed in a fund's annual or semi-annual report to the Securities and Exchange Commission. The Statement of Owner's Equity, which you should be familiar with by now, and the Statement of Changes in Net Assets. On this financial document, it provides the income amounts from all three category income types. It also provides the distribution breakdown to common shareholders by dividends and return of capital. Now, as you can see by the arrows that I drew from the Statement of Changes in Net Assets to the Statement of Owner's Equity, everything on the Statement of Changes in Net Assets form affects the owner's equity, so much so that you could say that they have a symbiotic relationship. Now, I don't know if I can actually use that term because it applies to biology. More specifically, symbiotic means involving interaction between two different organisms living in close physical association, which technically the Statement of Owner's Equity and the Statement of Changes in Net Assets do live within close proximity of their SEC filing. It also denotes a mutually beneficial relationship between different people or groups. Now, the relationship is not between people or groups, but it is definitely mutually beneficial. And to be quite honest with you, I can't think of a better analogy to give. Also, another analogy I can give is because since all this information that is so closely correlated is on two separate reports, you could basically say it's the equivalent of the left hand not knowing what the right hand is doing. Now, because Closed-End Fund Mastery does have artistic license, what Closed-End Fund Mastery is able to do is combine the essential information from both these reports in one simple report. And the resulting outcome is the chart you see before you. Now, to quickly interpret the fund's data represented in this report, we're going to focus our attention on the last data point. And for FIF, which we've been using throughout this video, it last filed with the Securities and Exchange Commission on May of 2022. We already know that there was a decline in paid-in capital from $244,500,000 to $238,420,000 because primarily they repurchased over $6 million in common shares. For the 6-month period, FIF paid out a total distribution amount of $6,197,163, leaving an accumulated undistributed earnings amount of $53,532,311. Now, we know the distribution amount was for a 6-month period because a fund reports to the Securities and Exchange Commission every 6 months. However, each semi-annual filing is not representative of 6 months. A fund will file its semi-annual report representing 6 months of information, and then 6 months later will file its annual report representing the full 12 months of data. So if you look at the history of the shareholder distributions, you can easily tell which is which. In November 2020, they distributed $17,300,000. 6 months later, they paid out $6,390,000. 6 months later, the amount doubled. That's how you know it's an annual, because it's almost twice as much as the previous 6 months. And then the following 6 months later, it was cut in half, representing only 6 months of distributions out of a full year. Okay, this video is starting to run a little long, so I'm going to quickly walk you through some healthy funds, and then, as promised, show you a guaranteed way to know if your fund is currently covering distributions from its current performance. The first fund is BTO. At a quick glance, you can see that the fund's undistributed accumulated earnings far exceeds the amount of distributions they've been paying out. Next fund is RQI. Same situation. Next, STK, same situation. It's worth pointing out that the last few funds I just showed you are not closed-end fund mastery qualifying funds, because despite having good-looking numbers, there's something within the numbers that closed-end fund mastery does not like at present. The next fund is a closed-end fund mastery fund, SCD LMP Capital and Income Fund. This is a good-looking fund. If you go back to when it reported in May of 2020, shortly after the crash, after making its semi-annual distribution because it's half of the previous 6 months, it still had a remaining accumulated undistributed earnings of over $5 million. Since then, that amount has consistently gone up and evened out. And you can see that the paid-in capital has been going down, and as of the last semi-annual report, you can see that they repurchased $3,153,000 in shares. And the difference between the undistributed accumulated earnings of $91,581,000 far exceeds the 6-month distribution payout of just over $9 million. Now I'm going to throw you a bit of a curveball. We're going to look at the fund CUBA, Cuba, Hirschfield Caribbean Basin Fund. It's a little bit erratic. It did dip in the negative in June of 2020, which is not surprising. A lot of funds did shortly after the crash in March of 2020, but it has recovered since. And after paying its $6,295,000 distribution payout, it still had an accumulated undistributed earnings amount of $5.5 million. The reason this is a curveball is because, according to the owner's equity chart, it does show that the fund does have sufficient means to make its distribution without having to worry about a distribution cut. Problem is, it did cut its distribution by 34%. Another fund, ETJ, as you can see, has ample amount of undistributed accumulated earnings to cover the $30 million distribution by over 4 times, yet it just cut its distribution. Why am I pointing this out? The reason being is because Despite having healthy balance sheets, closed-end fund mastery disqualified these accounts prior to their distribution cuts. Now, I don't know exactly why closed-end fund mastery sent the warning, and I don't know exactly why these closed-end funds actually cut their distributions, because they did have the means to maintain them. If I were to speculate, I would say that management is doing their job. And just because the distribution can be met, maybe it's better to err on the side of caution. Simply put, management doing their job and managing their fund. Maybe there's an element of ego involved as well. I could just see a fund manager now thinking to themselves, I'll be damned if I let this fund lose money under my watch. But that's just speculation on my part. And now finally, how to know if your current distribution is covered by current fund performance. If you make note of a fund's last reporting period, for example, June 2022 for the fund ETJ, and you look at the net asset value performance since that date, in this case, change in that NAV is negative 2.91%. What you want to see is 0% or higher. Anything in the negative from the last reporting period, the fund is not currently meeting its distribution obligation. Anything 0% or higher is covering their current distribution obligation. Very important. You can't use the 3-month or the 6-month or the year to date. You have to use the figure from the last reporting period. That concludes this video. If you found it useful or if you gained anything useful from it, please give it a like or comment. And if you'd like to see future videos like this, hit the subscribe button. Thanks again for watching.